Welcome to the InterMarket Analysis Update. This is for August 22nd, and we're using charts that ended Friday, August 19th. And not a lot of changes this week. The shift that we've been seeing going from value back over to growth is kind of taking a bit of a slowdown or a bit of a break right now, but we still want to go through the charts and see what has changed recently. So this is being prepared for Monday, August 22nd. First, looking at the valuation, we're still considered overvalued in a historical way right now by using the trailing 12 months. That's looking back to compare the earnings with the current price of the S&P. Or on the top, you can see the S&P is above the red line. And then down below, this is the difference between the S&P price and the red line, showing that looking backwards anyway, we're still in kind of an expensive environment. Now, looking forward, things are a little bit more in line, and that's what the market uses, but we still look backwards to get some historical perspective. This next chart just shows you historically, going back to 1980, how the S&P has performed compared to the different PE levels that investors like to use to determine if the market is fairly priced, undervalued, or overvalued. So right now, based on this chart, we continue to be overvalued. Going through some of our scenarios, these are still holding up. They showed a little bit of a weakness, especially with Friday's decline, but we're still working off of them. They're still valid signals. So the first one we look at to compare on an intermarket analysis basis is the S&P 500, and those stocks that are above their 50-period moving average, after giving us a pretty positive reading, almost extreme, has since fallen back. So the way I look at this is still a valid signal. Just because we shot up doesn't mean we're going to turn around and go back down. Now, the S&P is also at a critical point right now, where last Tuesday it came up to its 200-day moving average and has fallen back ever since. And now we're just trying to figure out, are we getting ready to take a bit of a rest before we go up through that 200-day moving average? Or is this the beginning of a decline now that we hit overall resistance and we're coming back down? You can make a case for either side right now. So we're just keeping an eye on that. There's a lot of internal strength. There's some things shifting in the market to make a case that we might try to go through that 200-day moving average. But we ultimately have to follow price and go with that. Now, looking at some other indexes, the mid caps, they're also coming off of an extreme negative reading and are showing some improvement, even though we have some recent weakness. And the small caps, they're also giving us a signal. So we're seeing three indexes, the S&P, the small caps, and the mid caps, all generating a signal at about the same time. And that can be considered positive since we're seeing it across an array of different indexes. Another thing that we look at is the number of stocks in the S&P 500 that are above their 200-day moving average. After giving us an extreme negative reading, it's bounced up. It's fallen back a bit now, but this is still a valid signal. Another one is the 10-day average of the S&P 500 highs minus the lows. It is still quite positive overall. And times when the market really goes up, we like to see this value really high where it's at right now, but it has not started to fall back, at least yet. Another area is looking at a broad spectrum of the American Stock Exchange, the NASDAQ, and the NYSE. It shows after giving an extreme negative reading, we're up slightly positive. So that's just showing more of a broad-based strength right now. The next one is the equity put call ratio with a 5-period simple moving average. We spiked up, have been coming back down. Now, this ratio has been going up slightly over the last few days as the market has been declining, but this is still a valid signal. We're also looking at the sector rotation. The Qs have been underperforming recently. It's dropped below the moving average, but the moving average continues to go up. Discretionary also showing a little bit of weakness, but it's still above the moving average, as is the large cap growth ratio to the large cap value. Still seeing relative strength with growth over value. Also looking at large, mid, and small caps, saw some weakness, saw a little bit of weakness in the mid caps and small caps, but the moving average is still going up. And with the large caps, we're still slightly above the moving average. The staples, after giving us a recent death cross, has really staged a bit of a rebound, and we might see a golden cross if this ends up continuing. When we compare that to the S&P, we still have this valid spike. At least it's still looking valid. We want to see this spike up and then really start to fall if that marks a significant bottom in the S&P 500. Even though this has advanced recently, it's still well below the spike, but we'll just want to keep watching that. Growth versus value. We're seeing a little bit of a decline in the value, in the growth index, still in an overall negative trend, but had been showing some improvement. Value also had been showing some strength, got above the 200-day moving average, has fallen back a little bit, but is also still in an overall downtrend. When you compare the two, we're seeing growth, which had been improving, start to show a little bit of weakness. And then the inverse is value had been showing weakness and has lately been showing some strength. Looking at another way of measuring growth versus value, we saw a lot of growth weakness earlier in the year. It's been bouncing back up, but has seen overall weakness, but growth is still in a downtrend. Here's an inverse of that same chart where the value had been doing quite well, showing some weakness, but has been rebounding and is still in an overall uptrend. Another way to look at growth versus value just shows how growth had been underperforming, bouncing back up, showing some weakness, and the inverse, where value had been stronger, showing some weakness, and has been bouncing back up slightly. Another way to look at this is the growth index versus the value index, where growth had been underperforming, showing some improvement, but some recent weakness. All right. Let's look at some other markets. The 30 biggest software companies, they had been in an overall downtrend. They almost made it back up to their 200-day moving average, but are showing some recent weakness. Looking at inflation, it's still declining. When you compare the inflation index with the deflation index, it just is going with this scenario that maybe inflation has topped out and it's starting to come back down. Now, this is a monthly chart, so that takes a while for this one to change. Also, one I haven't showed in a while, this is the Baltic Dry Index, and this is another way of measuring inflation. When this is really advancing, this shows that there is inflation in the market, and this measures the cost of what does it take to ship goods from one place to another place. And when the costs go up, this goes up. When the costs are coming down, this goes down too. And we've seen recent weakness overall, which is playing into the idea that maybe inflation has topped out and is starting to come back down. The CRB index has been in a strong uptrend. That's where we're getting a lot of inflationary things from. Some recent weakness, but has been bouncing back up, and now it's back up to its 50-period moving average. Corn, just some different commodities that we look at. After spiking up, really fell back, but is bouncing back up slightly. Aluminum really spiked up, came down, also bouncing back. Heating oil still is pretty high overall. Gas, which really spiked up, has been coming down and showing a bit of a bounce recently. This is what will help most of you when you go to the gas pump. And natural gas still is pretty high. Oil is down around 90.44 after really spiking up, has fallen a bit. It got down below 90 for a while, but has bounced back recently. Wheat also spiked up, coming down, and is not showing too much of an improvement, but still an improvement nonetheless. Lumber has been in a pretty solid downtrend for most of 2022 it did try to bounce back. Then the downtrend resumed. It bounced back again. But lately, we've seen some weakness. The US dollar, which when the S&P's been going up, typically the dollar has been coming down. And that's what we have seen for July and most of August. Well, in the past week, the dollar has shown some renewed strength, and that has put a bit of a pressure on the stock indexes. Here's the euro, which has been having some trouble against the dollar, which is on the bottom, just showing how the euro's been declining as the dollar has been increasing. This is the Japanese yen on the top, where it's been having a lot of trouble lately. The euro's also been in a decline, where the dollar has been showing some recent strength. Copper, another barometer of the economy. As it looked like things were getting weaker, copper really started to fall, but has since been bouncing back. We also measure the copper gold ratio. When copper's doing really well, which means it's looking like the economy is going to be doing a bit better, this tends to perform well. Well, what we've been seeing is copper has been underperforming gold, but lately has been showing a bounce back. This is that same chart with the black chart here showing the ratio between gold and copper and the spread between it and the 2-year yield. And they're still very far apart from each other. They tend to not get very far apart, and they also tend to move in the same general direction. Well, that's not what's happening right now. So this is producing a little bit of confusion in the markets. Gold, after having a bit of a bounce back up, has shown some recent weakness. And silver, the same thing. It tried to bounce back up, but some recent weakness and is still in an overall downtrend. Looking at some indexes, the CRB index, which had been doing very well in 2022, has lately been underperforming the S&P 500. This is an inverse showing how the S&P 500 has been underperforming, but has staged recent strength. NASDAQ 100, this is the growth area. This is a little bit of a concern right now. Now, this could change. We had been seeing the NDX or NASDAQ 100 really start to come back. Well, it's slowing down right now and isn't showing the strength, at least currently. Now, this could change, but right now, this is showing a little bit more weakness. Some other stocks, mega cap stocks. These are the real biggies, the Googles, the Apples, the Amazons, the monster stocks, where they've been in an overall downtrend for 2022, have been trying to stage a bit of a recovery bounce, but have shown some recent weakness. The S&P 100, which is mostly growth to the rest of the S&P, also it's trying to make some kind of a recovery bounce here, but has shown some recent weakness, and we're back down to the 50-period moving average, and it's still in an overall downtrend. Small caps, pretty much flat right now. When we started to see the S&P really advance into July and into August, the small caps have been doing quite well. They seem to be slowing down right now. And here's a ratio. Here's the red chart showing that we spiked up on a comparative basis between small caps and the S&P. Well, it's coming down slightly right now. That helped give some support to the blue chart, which is the S&P, but the S&P has been showing some recent weakness. Low volatility stocks. These are the stocks that folks like to get into when there's usually trouble in the market. They had really been declining. Actually, we saw a death cross here, but lately have been showing some improvement. Now we do a ratio between low volatility stocks and the S&P, where the S&P had been underperforming. That's hard to say. Low volatility stocks have been really advancing, but showing some recent weakness. The Dow Jones Composite was able to get back above its 200-day moving average, and it's starting to decline, but it's still above that moving average. That can be seen as positive for right now. It wants to hold this support to keep things more positive. Here's Dow theory showing how the Dow, the trannies have pretty much confirmed each other with price, where we're seeing utilities outperform right now. And here's a longer term look at the same Dow theory chart. Now, most folks just use the industrials and the transports together. I include utilities in this as well, just to get an eye view of how things are performing. We look for divergences, whether they're negative or positive. The FANG stocks also had been showing some improvement, but some recent weakness lately, and they're still in an overall downtrend. ARC, which also had been trying to make a comeback, has seen some real weakness lately, and it's come back down to the 50-period moving average, and it's still in an overall downtrend. Looking at bonds, bonds look like they were putting in some kind of a bottom and were showing a nice recovery, but since have been showing some weakness. So prices have been coming down as interest rates have been going back up. Here's the world bond index after putting in a bottom with the COVID low. Looked like they were really bouncing out of that, but now we're starting to come back down. Stock to bond ratio, a monthly chart, still shows that stocks are outperforming bonds. Here's another look at this with bonds to stocks, showing that bonds have been underperforming stocks. And then I have a correlation chart here, the stock to bond correlation. When the markets were doing better a few weeks back, we saw bonds and stocks going in the same direction. Well, right now they're more neutral. And so that relationship is just not really strong at this point. The Dow Jones Corporate Bond Index was showing some improvement, but lately is showing some weakness. And this is the S&P to the 10-year yield, where the S&P had really been underperforming, but then started to do better, but has shown some recent weakness. Junk bonds also look like they had put in some kind of a bottom, were bouncing back up, but have fallen back recently. Here's the junk bond to treasury bond ratio, showing that junk bonds are still outperforming treasury bonds. Here's the yields where it looked like through June and into July, and into July, interest rates were really headed down overall, but lately they've been going back up. Then there's the world look. On the top, you have US yield, the US yield on the 10-year, which has been advancing. And this is a weekly chart. And then the UK and Germany, their interest rates have been going back up. Japan has remained flat because they have a different economic situation going on there overall. Looking at some sectors, energy, which has been really strong in 2022, saw some recent weakness, but has bounced back. Recently, the tech sector came all the way up to the 200-period moving average, found resistance there, and has been retreating, and is still in an overall downtrend. Semiconductors also showing some recent strength, but has now gone sideways to slightly down. The tech sector, which had been starting to perform really well, has fallen back a bit, but it's still above the 200-day moving average. Some other areas to look at: growth, which has really suffered in 2022 with bond prices, which has also suffered. It's showing that growth has been outperforming, but has backed off slightly. The 10-year yield, which had been going up and up and up compared to tech, that looked like it was starting to show some weakness, but lately, as interest rates have been going back up, it's been bouncing up slightly. Here's the inverse of that. The tech sector, which was trying to stage a recovery, has seen some recent weakness. Discretionary also was making a nice little comeback, but lately has shown some weakness. Here's the inverse of that, showing how staples had been outperforming, started to show some weakness, but lately have been bouncing back up. So we're kind of going back, at least right now, into the scenario that's played out mostly in 2022. Doesn't mean it's going to stay this way. We've just kind of shifted back to that over the last week or so. Energy sector also really doing well, recent weakness, but some strength when compared to tech. And then gold, which had been starting to outperform the S&P, has really shown some recent weakness, and that weakness continues. Here's gold to the US dollar. Also, gold has been underperforming the dollar. It tried to bounce back up a little bit as the dollar was coming down, but with the recent strength in the dollar and gold going down, this has seen a decline. High leverage loans, where they had been really declining, starting to show a bit of a bounce, fell back below the 200-day moving average and are still in an overall downtrend. And these are loans that folks are willing to get into when they feel better about things. They're willing to take on more risk. Here's our intermarket analysis chart showing that oil has still performed the best going back to the beginning of the year, followed by the dollar. And then you have gold, stocks, and bonds, which have been negative for the entire year. Indexes, small caps. This was encouraging earlier in the week because the S&P never did get above its 200-day moving average. Well, the small caps did, but since then they have fallen back. Same thing with the mid caps, above the 200-day moving average, but has fallen back. The Dow also above the 200-day moving average, but has fallen below it. NASDAQ never did get to its 200-day moving average, but has shown some recent weakness. NASDAQ 100, the same thing, never got to the 200-day moving average, fallen back a bit, and now we're below R1. These are the areas we really want to watch because these are growth areas, and if they show some strength, this could really help the S&P move higher. The Wilshire never did get up to its 200-day moving average, but showing some recent weakness and has fallen below the pivot level. All stocks were starting to make a nice little comeback, but some recent weakness. Emerging markets never really have turned all that much positive and are still in a downtrend overall. Internationally, China is still having more or less a downtrend, where you have emerging markets, and Europe looks like it could be topping out and starting to roll over. And Japan also could be rolling over. The S&P is looking a little bit better, but could roll over if we see follow through weakness. Some correlations, not an awful lot right now. Most of them are neutral. The S&P to the dollar, it's in neutral territory. And a little bit out of neutral territory is the S&P and oil, where they're having a slight tendency to go in opposite directions. And here's the S&P to the 10-year, also starting to come back down into neutral territory, but they're tending to go more in the same direction currently. Tech to the 10-year, getting back down to being neutral. The S&P to the 2-year is also neutral. So what are some of our positive things? This hasn't changed. If you watched a few of these videos, they're the same. Energy, the CRB, and interest rates continue to be in uptrends. Where negative, we still have a lot of the downtrends that have been plaguing us for pretty much all of 2022. The one that was recently added is gold, the second from the bottom. That had been doing a lot better, but is now in a downtrend overall. So thank you. I hope you find this useful. This is meant to be more of an addendum to the daily videos that I do. But since that video is so long, I take that section out and do a separate video just focusing on intermarket analysis. I do have the daily video posted, and I will be preparing the weekly video. And I hope you find this very useful when you're trying to make decisions.